Zach's Screen of the Week, an overview of a timely stock screening strategy aimed at helping you produce more profitable investing results. We're going to talk about explosive stocks under $10. Not just any stock, explosive stocks. With Kevin Matras, our top stock screener here at Zach's. And people do like stocks under $10, don't they?
Yeah,
feel like they're getting a bargain?
Yeah, well, it's not always the bargain that it looks like. But yeah, this screen that I'm talking about today, it's kind of a departure from what I will normally do, because usually I will look for stocks that have a minimum price of $10. But again, you know, people like stocks under 10. I myself will search for stocks under $10 at times. This is one of those times. I'm running this screen for myself right now, so I figured why not talk about it today.
Great.
So.
What a guy you are. You've broken this out 3 different ways, though.
Right.
The first category, under $10, you've labeled penny stocks.
Right. You know, $1 is a common threshold that people will use when they screen for stocks. I think a lot of investors usually try to avoid penny stocks because of their speculative nature. Oftentimes, too, you'll find them at times to be difficult to trade because they have these wide bid-ask spreads.
Yep.
And usually, too, you'll see these cheaper stocks, they can carry with it some excessive volatility, and who wants that? But sometimes these penny stocks turn out spectacularly, and I think this is what keeps people coming back to them. Plus, too, seeing a stock go from, let's say, 50 cents, doubling or tripling in price, seems easier than seeing a stock go from 50 to 100 or 100 to 200. So there is some allure there, and I think that's why so many people kind of gravitate towards it.
All right, then you have the next category, stocks under $5.
Yeah, $5 is another common threshold. I myself will usually pay attention to that as well. One of the reasons why $5 is important is because a lot of institutional investors won't even consider a stock under $5. And since institutions usually are the investors that can move a stock, it's important to be able to make sure these kinds of traders can participate. But when you're looking at $5 stocks too, sometimes they're cheap. You know, $5 for a reason. They're just not worth anything else. But if you were to look at the hierarchy of these cheap stocks, getting over $1 does put these stocks into a different area of consideration. Getting to $5 also puts these stocks into a different area of consideration. So that's that category.
Then you have another group that you've labeled simply stocks under $10.
Right.
Is that everything that's not penny and not under $5?
Yeah, that's everything we just talked about. But this pretty much encompasses those two groups. My minimum has typically been $10, and one of the reasons why I will use it just comes down to convenience, because there's 10,000 stocks out there, and by simply eliminating everything under $10, that quickly lets me cull down this list. I can shave off thousands of stocks from consideration. But there are still plenty of fantastic stocks under $10. I can think of many stocks that I have traded under $10 that have worked out exceptionally well. So that is why I usually will continue to look at for stocks under 10. It's not part of my, my everyday screening process, but I do have some special screens that I will, routinely run to see if I can find some hidden gems. And I have just noticed anecdotally that once I see a stock, push through that $10 level, I have the same affinity for stocks that are pushing through 100. Usually once I see it make through that $10 level, it really does open up the door to a lot of other investors who wouldn't consider it. So getting in right before it makes that cross, I usually like looking at those.
So with this screen, I just want to clarify for our viewers, you have no real top-end target that you're looking at necessarily. Once it breaks through 10, then you monitor them as they go higher?
Yeah, so I'm not necessarily, I'm looking at the stocks under 10 and will only get in once they break through 10. But, if I'm looking at a cheap stock under 10 and I see that it has all of the right moves and all of the right qualifications, my hope is that I will get in underneath this price, I'll see it soar past that level, and then I'll be a big hero while this stock is going higher.
And when you're a hero, that's what we like.
Right.
When
Everybody likes to be a
happy,
hero.
we're happy,
Right.
believe me. All right, give us the parameters.
All right, here we go. The first one, as you may have guessed, is I'm looking for stocks with the price under 10 bucks.
Yeah.
The next one, though, I am looking for the average dollar volume to be greater than $1 million. So this item will show you how much money is trading in and out of the stock on a daily basis. So I want to make sure there is enough money trading in and out of this stock so it's going to be easy for me to get in and out, right?
Okay.
The next one, I want to see the weekly volume greater than the previous week's volume. Now what I'm doing here is I'm really looking at the last 3 weeks, and I want any 2 out of the last 3 weeks to have met that criteria. The reason why I'm looking at that is because if I'm looking at an increase in volume on a weekly basis, 2 out of those 3 weeks, preferably successively, that usually means that you're looking at a lot of investors taking the same bet. That could be the institutional interest that you're looking for. And if you're seeing the price rise with volume, those 2 things are confirming indicators. That gives me the confidence to be able to move forward.
Got it.
Continuing on, I'm looking for companies with a Zacks rank of less than or equals to 3. So you got the buys, strong buys and holds, no sells, no strong sells. Then you've got the average broker rating less than or equals to 3.5. That means we want the average broker rating to be a hold or better, nothing worse. I want at least 2 analysts covering this stock. A lot of these are cheap stocks. Some of these will have scant coverage. I want at least 2 analysts looking at this stock.
Okay.
And then lastly, I want the percent change in F1 EPS revisions over the last 12 weeks to be greater than or equals to 0. Preferably, I want to see increases, right? Upward earnings estimate revisions. At least there can be no change, but I am excluding anything where there is a negative change in revision.
Let's go to the results. What came through?
We had a bunch of stocks come through. Here's some of them. This is kind of a diverse list. You've got Celestica, Hercules Offshore, Northern Dynasty Minerals, PACR International, EW Scripps. All of these stocks look like they could be explosive. They all have some pretty great fundamentals. They meet all of the qualifications we just talked about. And this, to me, means that these are companies that belong on anybody's watch list.
Okay, do you own any?
No.
All right. Check out a text version of this week's Screen of the Week on our website, Zacks.com. Link to it right off the homepage where you see Kevin's picture. And if you want to check out more about the tool that Kevin uses to achieve all of these screens, the Research Wizard, then Zacks.com/researchwizard is what you should plug into your browser. With Kevin Matras and the Screen of the Week, I'm Terry Ruffalo.